fireside chat would be seated. Is that right? Okay. Oh. All right, guys. Really honored to be sitting with Kevin, who's obviously one of the premier, one of the biggest, best, smartest guys, in the space, in the real estate space, and I hear that there's a good percentage of people in this audience who are real estate investors at various levels. Kevin, well, I'm not sure if you heard my presentation a little bit earlier, that I was concerned about the equity markets because of the two factors that for me seem to be at least questionable, not predictable, and that would be the Trump tariff, whatever it is. I'm not a fan of it, and also the potential for in Rio, the BRICS country. If not, I don't think they're going to get it across the goal line as far as removing the dollar as a reserve currency. But the more the discussion happens of this, it just feels like they're just chopping, at the tree. Eventually, they may get it to topple over time. So that given, I'm thrilled at a 4%, 2-year yield and a 5-year yield. What, as important as interest rates are in your industry, what is your outlook for rates?
So I'll just say that when the tariffs came into play and the market started to touch below 38,000, I doubled down. I margined everything I had because, I have some personal experience with our president. He was a real estate developer when I was a real estate developer in New York, and we often ran into each other and actually tried to work together a few times. And I knew he was going to blink. I knew the tariffs were mostly nonsense. It would cause a problem, cure a problem, look like a hero. And so, in a very short period of time, probably 30 days, I almost increased the value of my portfolio by 35%. So I thank him very much for that. But the markets hate instability. Certainly the securities market. I also moved from there into the bond market. I took a big portion of my portfolio into the bond market. But you had a question about real estate. I'm sorry.
I wanted your outlook on maybe the short 1 year, 3-year outlook on rates, and we'll get into the real estate.
So listen. There's a tremendous amount of pressure on the Fed, on Powell, to soften rates.
By Trump?
Yeah, by Trump. Sure, of course, because that would be the icing on top of the cake for him, the cherry on top of the cake. A little bit of rate relief would do wonderful things for all sectors of the economy. Listen, everything is asset-based, and all boats, when rates go up, everything devalues, and when rates come down, everything kind of gets a little more valuable. So that's significantly true with real estate, especially if you're in the rental world, where cap rates are 70%, 60% of a cap rate is debt rates. And as debt rates go down, we look at what equity should get in that particular sector based on risk, and we come to some sort of return. And if we can bring debt down by 100 basis points, boy, that really increases value significantly. I'm sure a lot of you guys own some sort of rental property.
How many own some sort of real estate exposure?
Okay.
Almost everybody here.
Right.
Yeah.
So,
if I may, Kevin, I mean exposure outside of your own personal dwelling. Investment exposure.
Yeah.
Three-quarters, half, three-quarters, okay.
So this year I'm actually delivering I think in 4 or 5 different markets, a couple thousand units, probably $1 billion worth of rental property, mostly urban infill, Atlanta, New York City, Nashville, Fort Lauderdale, Wynwood, Brickell, whatever it is. And most of that equity has been pretty much wiped out. And because during the time when we started those projects 3 years ago, and today rates of course went up exponentially as we had an inflationary economy. The Fed increased the rates where we had 18 basis points where SOFR was, and then it went up to 5.5%. As we talked about cap rates, that pushed value up, OpEx went up significantly, and then we had all the issues during COVID, which was tremendous inflation during the COVID period. So for all those reasons, we found ourselves in a situation where a lot of the real estate that we were turning over was hard to refinance. Now this is happening nationwide, which is, if you're opportunistic, which we are, this is a great opportunity to be buying real estate today if you can put put a project together. I would say today there's not a better time. I think rates are going to come down. Costs have stabilized. OpEx is stabilized. Even insurance premiums that went up 300% over the last 3 years are now coming down. So I think today is, in the rental sector, today is a great time to be looking for projects. And even if you're a small investor, look for the 8-plex or the 4-plex. Frankly, that's how I started 30 years ago. I started buying little buildings. I'm a good plumber. I'm a great electrician. I know sheetrock. I'm handy. And I ran probably 30 or 40 buildings in my portfolio by the time I was 28 years old. And
May I, during the COVID crisis, pandemic, there was a massive outflow of people from the Northeast, inflow into Florida. It seems to be reversing, or maybe you can tell us it is reversing or it isn't. And the question is, when you invest, or if you invest in some sort of REITs, what would it be? Would it be geographic REIT specific?
Yeah, so I think a lot of markets during COVID had tremendous escalation in value or in price point. Florida was certainly a beneficiary. I think at one point we had 1,300 people a day. Mm-hmm. We're still like 900 people a day moving south. There has been a lot of people moving back, maybe to the Northeast from Florida, but we still are net positive in terms of the growth of the state. Listen, the state's a tax-free state. I mean, listen, Nashville's doing the same thing. There's still growth. There's been some oversupply. Miami's had some oversupply. You're going to have some softening currently, which again, being opportunistic, this is the time you want to be in the market doing these things. We're still seeing a net positive, probably 900 people a day moving into the state, which is a good. Are
there other areas that you think would be more growth opportunities?
I hate to be political, but a lot of the red states that we've been building in, where there's lower regulation, and so a lot of industry has been moving into them. We've done very well in those states, like Nashville, like Texas. Throughout the Southwest, we've done well. Atlanta has done reasonably well. So we love those markets where there's going to be continued growth. I mean, Nashville's looking at 20,000 new jobs over the next 4 years. That's a huge pop for a small city. So, I think there's great opportunity. Listen, I love when the markets turn down because I'm very opportunistic in that sense, and I'm going to bet in those low markets when it's tough to get things done. That's the rental side. A huge portion of our business, we're a very kind of small company. We're not a big developer. We always have about $3 billion under construction. We introduce and start $1 billion every year, and we monetize $1 billion every year. So there's kind of $5 billion of crap going on, but probably 70% of our portfolio is in the condo space. We have been able to give returns to our investors north of 50% IRRs in the condo space.
How are you handling the insurance issue in Florida?
Well, it doesn't. So in our space, because we're ground up new developers, right? So there's a very small capitalization required to start a sinking fund for insurance for the future. Obviously our buildings are obviously high tech, new steel, concrete, 200-knot windows. So we're not really affected. It's really the buildings that were built in the 50s and the 60s, and certainly buildings that were built on foundations that were like friction piles where they can kind of move, where you see a lot of cracking in foundations and you see terraces cracking. That's where huge assessments are coming in, and the state's making it mandatory to have engineers come in, do an assessment report, and forcing those buildings to comply. That is very troubling. But again, as we look at that and we say opportunistic, a couple of the projects we did this year were condominiums where the assessed value, the assessments were greater than the value of the apartment, and the value of their apartments as a new development were twice the market value. So we were able to step in and buy out condominiums, tear those buildings down, and build a great new structural building that at a higher price point. So everyone won, the condo owners. And so there's the opportunity in the assessment.
Couple decades, maybe 3-4 decades ago, the Miami condo index was literally a precursor to the market. Like we watched prices on the Miami condo market, and they were starting to move up. It was almost predictable that the general asset markets were going to move up. Is that still the case?
Yeah. So as we see a softening, in the Miami condo market today. So it is actually kind of, it lags behind it.
Now it lags. It used to lead.
Yeah, it used to lead. Now it's like,
okay. And for you, you're a buy the dip type of guy, even in real estate.
I'm always, I'm a long-term player in real estate. I always look to buy the dip. I like it very much when we move into recessionary economies. I hate to say that, but it's a benefit for us because we can deploy capital at much lower basis. We can sit on real estate for a period of time as those markets recover.
See, you're exactly like Trump. Yeah. He doesn't like. Trump says, "Look, we're collecting $2 billion in fees and tariffs a day, and we lost $10 trillion in asset value in the equity market."
Well, it's true, except the $2 trillion are taxes on you guys. So. I learned that in 6th grade, where I think he missed that classroom. But we're already seeing. So we should talk about tariffs a bit because it's important. We're already seeing a lot of our subcontractors sticking tariff language in our contracts, and we're actually seeing tariffs being imposed, albeit small, 3 to 5%. But they do add up, and of course we're going to pass that tariff on to our buyers.
You have to.
We have to,
so
and that's
this nonsense that don't worry, they're
no. Listen, guys, it's a consumption tax. Everyone knows it is.
But will they abuse it, Kevin?
Well, they do. Well, no, they are. They are.
I remember when oil prices first shot up $100 a barrel. There was a fuel surcharge on almost everything you bought because they were people who had nothing to do with the fuel were charging on it. Are you seeing that now? Are they preemptively jacking up?
Because all the guys who supply my steel and my concrete, they're opportunistic too. They're company owners, and they get to read about this. Wow, we can just go ahead and stick a tariff on there, and it's happening. And we push back. We say, well, you're going to lose the bid to another subcontractor who's not doing that. But absolutely, why not? If I were one of them and I were selling $50 million worth of steel on a building to a guy like me, I try and stick a tariff on top of it, and they are. And so it becomes a negotiation and a pushback, but all tariffs ultimately end up in the consumers in their cost buckets.
Sure. We had a fascinating little chat out there, and I'll decide if you want to bring it to the folks that the difference between Trump and Xi is great, and why? Well,
so Xi is China is a generational or centurion thinkers, right? They've rolled out this year or 2 years ago. They want to do 26 nuclear power plants around the country. You knew they built the largest hydro dam by just evicting 5 million people, in 24 hours, and flooded the valley. But they think in terms of they want to bring power in the next 20 years to 4 cents a kilowatt adjusted for inflation to their people, which would make them superior in AI, and it's a great result. Something you can't do in America. But she might sit at the table with Trump and smile, which he does. They think in terms of 100 years out. I mean, I know it's a dictatorship and he's the president forever until he dies, but they have a massive population. They have grown tremendously. They've done things in the last 20 to 30 years that we couldn't do in 2 centuries. But they don't think in terms of, wow, we have a 4-year president throwing tariffs on me. They'll absorb the tariffs. I mean, they'll deal with it. They'll tariff us, and then he'll move on. It's just like when companies say, we're going to invest $500 billion into the. Listen, if I own an auto plant in Korea and I'm building cars, it would take me 20 years to move my plant into the U.S. I got to go find the land. I got to permit it. You can
say you're going to.
Yeah, no, I'd be the first one standing next to him. I'm giving $1 trillion.
Right.
I'm betting, but it's not coming. Come on.
I'll top your 500.
Okay, yeah. I'm just saying, it's all good populist talk. I appreciate that, and I don't dislike him. He's a funny guy. he's, if I had to go hang out with someone, he's a great guy to hang. I just don't think his policies make a lot of sense. That's all.
Yep.
It's not. I have no personal vendetta against him. I play golf with him anytime he wants.
Okay, I'll let him know.
Yeah.
Let him know. Make the case for and against the real estate market right now.
The real estate market could continue to soften. It could continue to go down, depending what happens to our economy. I don't know what's going to happen next with our president, or what his next executive order is going to be. So it could get worse. But we're definitely on the downside of the market, and that's a good thing if you're going to want to nose around and find another asset that you want to buy.
Does it give you at least a little bit of a good feeling that knowing that his history as a real estate developer, that he's going to probably take care of that industry as best he can?
Absolutely not. How do you ask you loyalty to the real estate market?
Well, you pressure Jerome Powell to lower rates. You
Yeah,
work out deals for steel and lumber.
I don't think that Powell is going to. Jerome Powell is going to necessarily do what Trump wants. I mean, I'm sure there's tremendous pressure there, but I think he's pretty good at that. So, we've had some great numbers recently. We had unemployment's doing well, inflation's doing well. These are great numbers, right? The stock market's reacting to it. This is all, very positive, but you don't know what's going to happen next. So the uncertainty, like in the securities or in the bond market, or how the dollar reacts, is really tied to snap decisions that the White House might make. And everyone hates uncertainty. But as the market, if it gets worse, get more involved. I'm just telling you, there's people out there that are having trouble refinancing their properties today. Those are opportunities for everybody in the room. I don't care if you're going to buy a duplex or a fourplex, or you can buy a 20-unit or a 500-unit project. There's a real opportunity now, and there's been markets that have been way overbuilt, and so there's 3 and 4 month rent concessions on leases in Class A property. Well, that tells you right now that those properties are in some serious trouble. We bring investor groups together, and we pay very big coupons.
What turns the corner for those properties?
What's happened what's happened is just simply in all those markets, supply has stopped. No one can build because they realize there's this problem with oversupply. And so over time, all those units will get absorbed. Those concessions will go from 3 months to 2 months to 1 month.
In this area, and a lot of people are invested here, I'm told, can this area handle more? I mean, it's the traffic and infrastructure worse than New York.
Yeah, so yes. Well, can we? Sure. You got to kind of live where you work. But, and I live way up north past Sunny Isles, and I have to drive an hour and 10 minutes sometimes every day each way. It's a nightmare. Infrastructure, there's really no place to go. You can't go really underground. The Bright Line was a great idea. Maybe some more trains, but I don't know that infrastructure is going to change, and it takes decades to do so. I think the level of building now is outpacing infrastructure probably 10 to 1.
So my concern would be you build and you can't get people here. And if you get them here, they're so displaced by where they work versus where they live.
Yeah.
That's the offer. That's not the bid.
No, but we have found that because we've delivered a couple of thousand rental units into this immediate area, we found out that people have kind of given up their car, and they work in the city.
It's like New York.
So we're taking cars off the road, but I'm just telling you, it's way outpacing the infrastructure. I can't imagine in my lifetime catching up.
We only have a few minutes, I think, right, guys? Do we have time for a couple of questions? Sir? He'll get you. He'll get you.
He'll get
you. Speaking about real estate, Kevin, what's your opinion on prison real estate, such as Geo Group and Core Civic? Do you think it's a big demand with Trump? The CEO of Geo Group, when right after the election day, he went to Mar-a-Lago to kiss the ring, and all that. So, because I'm also an investor in prison real estate. On our previous, due to the last April's Miami show, there was a real estate expert, and he said, it was a good investment. So I'd just like to hear your opinion
Good
on that.
question.
I don't really have a lot of background in prison real estate. I thought we were all going to El Salvador anyway, but
Yeah, El Salvador prison real estate. There you go.
but anyway, and I went to kiss the ring a month ago to Mar-a-Lago too, and he knows I don't like him, so
Wait,
Yeah.
he just countered himself.
Yeah,
He said
yeah.
he did not like him.
he did. And he knows I don't like him, and I went kiss the ring. But
You were right in behind Bezos.
Yes, I was a
Mark
table.
Zuckerberg was behind
I
you.
was a table and a half away, and I stayed to the end.
All the anti-Trumpers.
I don't have a thought on prisons. I don't.
Can we squeeze in another question? I'm getting the time's up, but yeah.
So what do you think is going to happen in Florida with DeSantis and the taxes that he said he's going to take away or reduce?
Yeah, he's going to try and boost real estate a little bit by getting rid of real estate taxes and increasing sales taxes. Well, I think it's a hard road, but listen, I also was with him just last week. I think it's a hard road, but let's see if he can pull it off. I mean, it'd be a great boost for real estate.
The whole economy, the Florida economy would explode.
Yeah. I mean, because really, they try and assess at 2% of value or purchase price even before you homestead, if that's what you've done.
Imagine no
Yeah.
state income tax and the removal or lowering the wow.
Well, all he's
What
going
a
to do is
draw.
replace a consumption tax on sales tax. That's what. Yeah, sure. I guess it's
We
doable.
have a budget surplus.
Yeah.
I live down here now. There's a massive budget surplus.
Yeah.
So for the time being, it's
Right.
very doable.
Yeah, and it's because of all the development and all. Those are huge taxes with all this new real estate. There's hundreds and hundreds of billions of projects going up in just kind of this South Florida corridor, and if you think about the taxes, we have a tremendous surplus.
Can I ask these folks?
Yeah.
Ask you a question for these folks and myself too. If you were going to take $1,000, where a publicly traded REIT, how would you invest your $1,000 with a real estate?
I'd find a depressed. For me, I'd buy an office REIT.
A what?
An office REIT.
Okay.
Office REIT. Why?
Okay.
Because office is still a little bit depressed even down here.
Okay.
And there's
A location REIT or just general?
No, just office. It stays in Florida. There's office REITs that are
In Florida.
In Florida,
Florida
yeah,
office
yeah,
REIT there.
yeah.
There you go. Is there one? I don't even know if there's. Does anyone know if there's an office REIT in Florida that's publicly traded?
I have one, but I can't because I bought a lot of it, and
You don't want to talk
It's
about
going to
it.
get sold soon, and I'm going to.
Yeah,
get
you don't
going.
want to have
Yeah,
someone.
yeah.
So, but I will look up this Florida office REIT.
That's my 2 cents. That's what I've been buying.
We good?
Yeah.
You tell me?
We are good.
Okay.
Okay, good. Kevin Maloney,
Thank
everybody.
you,
guys.
Kevin.
Appreciate it.
Thank you, Eric.